The chainsaws weren't running. The yard was silent. In Central Oregon, one of Weyerhaeuser's biggest lumber sites had gone dark. Not for maintenance, not for upgrades, but because of a White House decision made 2,500 miles away. Donald Trump's tariffs on Canadian softwood had just been raised, and suddenly American timber was too expensive for its own builders. Inventory piled up, contracts froze, workers were sent home. That same morning, Trump told reporters there was no real urgency to make a deal with Canada. They'll just pay tariffs, he said. But the price wasn't being paid in Ottawa. It was hitting Boise, Grand Rapids, and Atlanta. Builders were backing out. Developers were canceling mid-project. What was framed as economic strength was now showing up as hollow skeletons on abandoned lots. Weyerhaeuser, the largest private owner of timberland in the United States, reported a 50% plunge in quarterly profit. Net income had dropped from $173 million the year before to just $87 million. Lumber sales had slowed dramatically not because of demand collapse, but because cost volatility had made pricing impossible. They flagged in their SEC filings that the new tariff environment was driving material risk in procurement and downstream operations. Meanwhile, the National Association of Homebuilders reported that average new single-family homes had jumped $18,600 in cost, due entirely to tariff-driven lumber price spikes. First-time homebuyers were being priced out, not by inflation, but by geopolitical strategy. In Washington, Canadian Minister Dominic LeBlanc arrived for closed-door meetings with Commerce Secretary Howard Lutnick. His message wasn't public, but his leverage wasn't theoretical either. The Canada Pension Plan Investment Board, CPPIB, had over $714 billion in assets under management. Nearly half of that, 47%, was invested in the United States. LeBlanc's approach was surgical. If they're looking for countries that invest massively in the United States, he told reporters, that's great news for Canada. This wasn't a warning. It was a reminder. Canada didn't need to retaliate. They could just stop expanding investment. As Weyerhaeuser's earnings tanked, the Canada Pension Plan Investment Board was, greenlighting new allocations, $15 billion into data centers in partnership with Equinix. Several of those data hubs were actually slated to break ground in Texas and Virginia. And interestingly, none of it was tied to trade policy. We are not part of any negotiations, CPPIB spokesperson Michel Leduc said. Our capital flows where it earns stable return. Trump's tariffs were supposed to gain negotiating power. But Canada was already one of the largest investors in U.S. infrastructure. The contradiction was, brutal. Ottawa didn't have to negotiate. They already owned a share of the outcome. Back in the housing market, the U.S. Census Bureau reported the sharpest decline in new home sales in 3 years. Inventories of unsold properties surged to 2007 levels. Construction permits for single-family units fell sharply for the third month in a row. Analysts at Barclays called the housing data staggering given the underlying consumer demand. The tariff wasn't reducing Canadian imports. It was disrupting domestic supply. Weyerhaeuser warned that third-quarter profits would fall another $60 million, regardless of sales volume. Price shocks and input delays had triggered a nationwide slowdown. British Columbia Premier David Eby suggested a soft cap on lumber exports, voluntary quotas to reduce cross-border friction, but instead of opening talks, the U.S. Commerce Department escalated. In March, they raised anti-dumping duties from 7.66% to 20.56%, with countervailing duties adding another 6.74%. The combined tariff rate was now over 30%. Eby's offer went unanswered. The BC Lumber Trade Council called the increases unjustified, punitive, and deeply destabilizing. Within days, Canadian sawmills rerouted contracts to China and South Korea. The U.S. had pushed its largest timber supplier out of its own market. Weyerhaeuser's stock dipped 12% post-earnings. But traders weren't panicking. They were adjusting. As Canadian supply dried up, U.S. builders couldn't secure alternate sources. Southern yellow pine mills were at capacity. Eastern hardwoods couldn't substitute volume. And West Coast fires had already decimated yields. The problem wasn't foreign competition. It was domestic limitation. Lumber doesn't grow faster just because a tariff says so. Meanwhile, U.S. auto policy revealed another contradiction. Trump had rolled back tariffs for Japan and the UK, but left Canadian-built vehicles under elevated duties. David Adams of Global Automakers of Canada called it a regulatory insult. Canadian cars often include 40 to 50% US parts. Japanese cars include none. Yet the former paid higher import duties. Even Mexico under USMCA saw better terms than Canada. It wasn't policy. It was political theater, with Detroit caught in the middle. Republican senators in timber-heavy states began raising alarms. Roger Marshall from Kansas, Shelley Moore Capito from West Virginia, and Tim Scott from South Carolina privately warned USTR staffers that tariffs were hurting local industries. But the administration held firm. "We're bringing leverage to the table," one White House advisor told Reuters. The problem? There was no table left. Dominic LeBlanc wasn't negotiating. He was documenting. CPPIB's 2025 roadmap showed gradual withdrawal from over-leveraged U.S. sectors. No press release, no statement, just capital flow. Away. Washington launched a tariff war thinking it held the hammer. But when your allies are also your landlords, you're swinging at your own foundation. CPPIB wasn't alone. The Ontario Teachers Pension Plan and British Columbia Investment Management Corporation, together worth over $500 billion, also confirmed growing caution toward U.S. real estate. In leaked internal memos obtained by the Financial Post, analysts flagged regulatory unpredictability as a key risk in lumber, logistics, and infrastructure plays. That uncertainty was having global ripple effects. South Korean sovereign funds began diverting cash into Canadian riettes. German infrastructure consortiums launched bids in Vancouver. Capital was rerouting, not retreating. The Trump administration, meanwhile, announced a $550 billion investment framework with Japan. Tokyo would commit to co-funding U.S. projects, including semiconductors and utilities. The irony wasn't missed in Ottawa. The U.S. was now begging for Japanese capital while alienating the Canadian capital that already funded American infrastructure. And none of that included defense offsets, where Canadian aerospace firms, many integrated with Lockheed Martin, were suddenly reevaluating future U.S. exposure. Back in the timber sector, the contradictions only grew. Builders were now offering incentives for alternative framing materials. Steel beams, hybrid concrete, even engineered bamboo. Not because they preferred it, but because, well, it was price stable. Lumber had become geopolitically volatile. And when that happens, the industry doesn't wait for a resolution. It just moves on. Mark Carney addressed reporters, saying, "This isn't about speed, it's about strategy. We'll sign a deal when it makes sense." He wasn't bluffing. Carney, a former Bank of England governor, had built a reputation for analytical calm under fire. If Trump expected a photo op concession, he'd misjudged the opponent. Meanwhile, Ottawa quietly began exploring free trade expansion with ASEAN and Latin America. Canada's goal wasn't to isolate the United States. It was to outgrow its dependency. The United States housing sector saw continued stress. In June, new building permits fell again. Lennar Corporation and D.R. Horton both revised guidance downward, citing, commodity unpredictability. But buried in those filings was a deeper message. Canadian tariffs had created uncertainty that capital markets couldn't price. And when that happens, money just leaves. The Department of Commerce still hasn't issued a strategy paper on Canadian lumber. The Office of the United States Trade Representative declined to comment. Industry groups continue sending letters. None answered. In the absence of direction, American firms are cutting exposure. Small home builders in Indiana and Alabama are shelving projects. Prefabricated housing startups in Arizona are postponing Series B funding. Everyone is waiting, but for what? Kirsten Hillman, Canada's ambassador to Washington, said, "There is a time when the deal is the right deal. Until then, we keep stabilizing." And stabilizing is exactly what Canada was doing. In the second quarter, it increased domestic timber harvesting licenses by 8%. Opened a new export rail line in Saskatchewan, and secured a new agreement with Taiwan. Trade friction hadn't slowed Canada's industry. Actually, it had sped up its diversification. Meanwhile, CPPIB's diversification model went public. Their top 10 holdings included infrastructure plays in India, data farms in Brazil, and shipping in the Nordic corridor. The United States was still the largest slice, but now only one slice. America, once considered the safest harbor for global capital, had become a volatility zone. By late July, Weyerhaeuser issued a statement saying it would reduce guidance for the remainder of 2025. The stock took another 4% hit. Analysts at JP Morgan reduced their rating to neutral, citing, quote, unresolved external risk factors, end quote. Translation: the tariffs were still in place, and no one knew what came next. Trump remained defiant. If they don't want a deal, that's fine. We're making America rich again. But even conservative think tanks began questioning the math. The Heritage Foundation noted that tariffs on allies had cost the U.S. housing sector nearly $3.2 billion in added materials costs since January. The policy wasn't protective. It was parasitic. Trump thought tariffs would make Canada fold. Instead, they made Canada richer, calmer, and more diversified. And they made America something it never expected: the most expensive place in the world to build a home. We're glad you're enjoying this video. Please like and subscribe. And, check out another video that is now on your screen.